Hello and welcome to this Forex Preview at xm.com. We'll be taking a look at the upcoming ECB meeting and the potential reaction in the euro. I'm Maria Pachardez, and joining me is investment analyst Cristina Parthenidu. So Cristina, at the last meeting, the ECB delivered a jumbo rate hike to fight inflation. What are we expecting this time around when policymakers announce their decision on Thursday? How different might this meeting be?
Hi Maria, it's nice to see you here. That's right, the ECB has to hike interest rates once again because unlike the US inflation, the Eurozone inflation has yet to show any stability and is rising at almost double digits. So the fight against inflation is apparently not over yet, and investors are certain that the central bank will repeat September 75 basis point rate hike this week, even if the negative surprise in the latest business PMI report showed that the Eurozone might be already in a recession. Now, how different this meeting could be? Well, there was a group of dovish policymakers who recently appeared a bit cautious about the cost of maintaining such a policy aggression, raising questions about whether interest rates are approaching the terminal or otherwise the neutral level, which neither stimulates or restrains the economy. Well, the European Systemic Risks Board did mention three systemic risks to the euro economy last month, including a renewed balance sheet stress for non-financial corporations and households, a potential fall in asset prices and asset quality and profitability. So it will be interesting to see if the central bank is already thinking to stop at the so-called neutral level, and generally if there is any indication about when that could happen, especially as the year approaches an end. Nevertheless, I think that such a decision is premature at the moment because of the inflation situation, and the ECB will not provide any clear direction on that, likely relying on data to determine the next move in interest rates. Besides, the central bank will not update its economic projections before December, so that might be a story for another day. Now, besides interest rates, I think eyes will also be on the balance sheet issues too, like when the reduction of the central bank's bond portfolio or otherwise quantitative tightening will start. Again, I don't think that this is the right time to take such a decision. Of course, it's good to have a plan in advance, but I don't think that any information needs to be leaked now because of the uncertain economic environment that has already brought some damage to the bond market, even without quantitative tightening. So overall, besides interest rates, any comments on the neutral level and how quantitative tightening might start, that could make, those topics might make this meeting more interesting to watch.
Okay, turning to the euro now, it managed to close positive against the US dollar last week. Could the ECB's policy announcement result in more gains for the currency?
Indeed, the euro closed softly up against the US dollar last week, but overall is still following a bearish trend, and it has been barely reacting to any rate hike headlines so far. So it seems that the huge uncertainty about how the fourth quarter will develop and if a recession will come worse than expected, that is probably offsetting any gains in the market. And of course, the strength in the dollar is something that keeps the euro under pressure as well. So unless we get a clear hawkish guidance this week about the ECB's next policy steps or otherwise any dovish changes in the Fed policy outlook, I don't think that the euro will be able to extend its recovery significantly this week. It's also worth it to mention that a couple of US data, including the core PC inflation measure, are on the agenda this week, and those could create some volatility in the euro dollar this week.
Cristina, thanks so much. And thanks for joining us at xm.com.